What do you got to do? You got to load up on gold and silver. Silver earlier today got above 90 again. We've pulled back. We're at 89.50. Gold is got above 5,200, pulled back late today, but it's still trading now at 51.91. You got to buy gold and silver. Silver, I guess, look, at $90, could it fall back down to 80? Yeah, I guess so. But who the hell knows? But gold at 5,200, you don't got much downside. Again, 5,000 is the floor. Maybe it goes 4,900, a little bit below, but it may just be going up.
I believe the movement of stable coins through the Genius Act will indeed incentivize much higher gold. Do they get to a point where they put it massively higher just by decree? Don't even need congressional approval? Maybe they will. But I do think, without question, they want gold massively higher because it is the ultimate measuring stick of a devalued dollar, not the dollar index.
In today's news recap, gold advances to top $5,200. The precious metals complex experienced a mixed but strategically significant session on Thursday, February 26, 2026, as investors navigated escalating geopolitical friction and shifting U.S. trade policies. Gold maintained its steady upward momentum, advancing 0.71% to close above the $5,200 threshold at $5,201.50. The yellow metal's resilience was primarily driven by robust safe haven demand amid high-stakes international negotiations and renewed trade uncertainty following the administration's latest tariff announcements. Silver faced mild resistance, dipping 0.18% to settle at $89.10. After flirting with the $90 mark earlier in the week, the white metal encountered anticipated profit-taking as short-term traders moved to the sidelines. In the industrial sector, platinum retreated 0.92% to close at $2,270.30, cooling off after Wednesday's massive 5.6% breakout as the market digested the rapid gains. Palladium, however, bucked the downward trend in the PGM space, adding another 0.92% to close near $1,814.50. The divergence highlights persistent supply constraints and ongoing short covering that continue to insulate palladium from broader industrial pullbacks. Now smash the subscribe button, turn on notifications, and make sure you check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold and silver ratio and get more ounces without relying on market commentators. Link in pinned comment. Let's get back into the episode.
So for the companies that do hedge, the cost became 300% more expensive. On top of everything else, the companies who don't hedge, well, they just literally stared into the abyss when this happened. Huge positions that are now massively underwater. You can't sell it. You have to wait it out. And has it come back yet? No. So that would make those companies that don't hedge create a huge spread between what they're comfortable paying and what the actual metal is worth. The refiners, they have metal in their working capital or working stockpile that they've already paid for. And, it takes a long time to break things down and then put them in a form that can be melted to pure silver, pull out the impurities, take that, turn it into shot, then melted down into bars and rounds. It takes time. They've been getting margin called all the way up, not only with the increase in the price of silver continuously, but also the margin increases. They stop taking business. So you have the companies that do hedge facing an immeasurably high cost and expense. You have the people that don't hedge having a real big problem about buying stuff from the public or hedging what they, or finding a way to protect the inventory that they do have, because you don't make enough money in this industry to mess around with a large percentage move. So they're afraid to do anything, including buy stuff from the public, because by the time they buy and they walk out the door, they could be out of business done if it's large enough. And then you have the refiners, which are a tremendous form of liquidity to the market, gummed up completely and totally because of this. This is why I don't think you're going to see it happen again. I think whoever pulled this lever got a lot of flack about it because the unintended consequences reverberated not even into this industry, more so the refining industry, and what that does to real businesses that need not just precious metals, but that need refining capabilities for whatever it is that they're doing. Not a good move. And so, but it seems like a drive-by shooting out of desperation. But all of this combined with the record volume in January created an environment I've never seen before. And I want to apologize to people for how long it's taken for things to get completed. It's very difficult to hire people in this industry when you walk into a precious metals warehouse and there's far more money there than it is in a half a dozen savings and loans in the neighborhood. And so you have hiring people is difficult. The intake procedure and the releasing procedure is something we're proud of, and it's regimented and it's videoed and it's filmed and it's under dual custody and it's all of these things that need to be done. But we're getting so much coming in and moving out, and it's crazy. And then you get the gum up with, well, this guy, this refinery, was supposed to send us the money. They've shut down. They're slow. We're waiting 3 months to get paid by the refinery. We're waiting, 6 weeks longer than normal to get the stuff out of, the depository, and the IRS custodian is just crawling because of the amount of volume that came out of nowhere.
In today's news recap, Deutsche Bank reiterated a bullish outlook for silver, pointing to strengthening relative performance among white metals and continued signs of robust investor positioning. White metals have recently begun to outperform gold again, a move that is beginning to defy the neat and tidy historical template of silver outperformance, followed by a partial retracement. Deutsche analyst Michael Sue said in a note, the gold-silver ratio has fallen to 57, below Deutsche Bank's longer-term assumption range of 60 to 65 for end 2026 and 2027. The ratio measures how many ounces of silver are needed to buy 1 ounce of gold and is commonly used as a gauge of relative value between the two metals. Sue said sentiment indicators remain notably strong. He noted that the silver 3-month risk reversal has climbed to its highest level of the year and, in fact, reached a new 20-year high. The analyst also pointed to the resumption of Shanghai M1 to M2 backwardation in silver following the Lunar New Year holiday, with levels still above those seen in January. Together, these signals present upside risk to our year-end silver forecast of $100 per ounce based on a gold-silver ratio of 60, Sue wrote. He said the recent price moves fit within a broader pickup in precious metals, noting that white metals have resumed outperforming gold even as previously elevated silver and platinum lease rates have eased. Speaking more broadly, Sue also flagged changing dynamics in the precious metals complex, highlighting that gold has recently crossed back into outperformance versus the US dollar based on its trailing 60-day beta. He said this as an encouraging development for its constructive gold view, even though he said there is still a long way to go before matching the outperformance seen in the last 2 years. If gold were to resume a similar degree of outperformance versus the dollar as seen previously, it would be more consistent with gold reaching $6,900 per ounce compared with its base forecast of $6,000, he added. Now, like and subscribe to the channel and make sure you check goldsilverstacks.com to get the Numismatics Handbook, the ultimate guide to dive into the world of numismatics. Very useful in this environment with multiple value plays like junk, silver coins. Link and pin comment, get your copy, and let's get back into the episode.
No talk about the weakness in the dollar. That's going to continue. No talk about the underlying weakness in the labor market, in the economy, in the fact that interest on the debt has spiraled out of control and that we're now paying more for interest on the debt than we are for Medicare or Medicaid, right? The only program that's still bigger than interest on the debt for now is Social Security. But we are heading towards a fiscal cliff, heading for a currency crisis, a sovereign debt crisis. And all he talks about is how great everything is, how the State of the Union is great as we're, nearing our 250th anniversary. And yes, I mean, that is going to be a big number in July. But we have some serious economic problems that the president claims not only don't exist, but that the golden age of America has returned. And he mentioned that several times during the State of the Union. It's here. This is the golden age of America. America is the greatest it's ever been. We're the richest we've ever been. We're doing the best, and our greatest days are ahead of us. And hopefully they are. They're just not right ahead of us. Maybe they're ahead of us in the distant future somewhere, but they are not ahead of us during his term. Not even close. We're headed for some dark days. We're headed for a real economic crisis, worse than 2008, on an order of magnitude. And one of the worst parts about this horrible crisis is who it's going to be blamed on. It's going to be blamed 100% on Trump and all the Republicans. Every Republican who's stood in line and cheerlead, you're all going down. You're all going to get blamed. And you know what else gets blamed? Capitalism. Because the Republicans are associated with capitalism, even though there's a bunch of socialists in the Republican Party. Republican, is the brand for socialism, capitalism. And so when the Republicans tank the economy, or it tanks on the Republicans' watch, it's capitalism that takes it on the chin. And then the Democrats get to say, not only did we tell you so, right? Blame it on the Republicans, but now they get to blame it on capitalism, which they don't like anyway. And it enables them to offer up their socialist solutions that will just make the problems caused by socialism, disguised as capitalism, even worse. But that's where we're headed. And I think the Democrats, as screwed up as that party is, are headed to big victories in the midterms later this year, and an even bigger victory in the presidential election. So what do you got to do? You got to load up on gold and silver. Silver earlier today got above 90 again. We've pulled back. We're at 89.50. Gold is got above 5,200, pulled back late today, but it's still trading now at 51.91. You got to buy gold and silver. Go to Schiff Gold. Silver, I guess, look, at $90, could it fall back down to 80? Yeah, I guess so. But who the hell knows? But gold at 5,200, you don't got much downside. Again, 5,000 is the floor. Maybe it goes 4,900, a little bit below. But it may just be going up. Look at the gold stocks. I made this prediction on my podcast a week or two ago. I said that gold mining stocks, the GDX and GDXJ, will hit new highs before gold and silver hit new highs. And a lot of the gold and silver stocks, particularly the gold stocks, not the silver stocks, the gold stocks, a lot of the big names hit new 52-week highs today. And gold is still $350 below its high. Silver is 30 cents below its high. And many gold stocks have hit new highs. The GDX and GDXJ have not quite hit new highs yet. They probably will by the end of this week. I think by the end of the week, those two indexes will have hit new highs, fulfilling another one of my predictions. But this is bullish for gold and silver. The fact that the stocks have now made new highs ahead of gold and silver is a leading indicator. And the next time gold gets to 5,500, it's going there and beyond. But when it gets to 5,500 again, the gold stocks are going to be a lot higher than they were when it hit 5,500 the first time. And silver even more so. By the time silver takes out that $121 high, which it will, the silver stocks will substantially higher the next time silver's at 120 than it was the last time. So you still got an opportunity to load up on these mining stocks.
What do you think of Andy's take? Do you agree with him? Will gold and silver continue going higher in Q1 2026, or are we going to experience some sort of volatility to the downside moving forward? Post your honest opinion in the comment section down below. Share with us your opinion on our newest channel called Woman Stacker, and watch this video right here because you'll love it. I'll see you on the other side.